In this video, I'm going to discuss the recent announcement from Social Security about the cost of living adjustment that Social Security recipients will be receiving in 2026, as well as some other information about Social Security cost of living adjustments in general, and some other changes that Social Security announced too. Welcome back. This is episode 278. In this week's episode, I'm addressing a recent announcement from Social Security regarding the 2026 cost of living adjustment, as well as discussing the projected 2026 Medicare Part B premiums. If you're new to my podcast and my YouTube channel, my goal is to help teach you how to save for retirement, how to plan for retirement, how to invest for retirement, and how to pay less taxes in retirement. If you want to learn more about how you can do this, then consider taking my comprehensive retirement planning course called Retirement Readiness on Demand. It's an online course where I walk you through all the steps involved in planning the ideal retirement. And if you'd like to learn more, head over to retirewithryan.com and click on Demand. So finally, after some delay due to the recent government shutdown, the Social Security Administration has announced the cost of living adjustment beginning for 2026. Now, the good news is that Social Security benefit checks will be going up by 2.8% beginning in January of 2026. So that is more than the 2.5% increase that occurred in 2025, as well as the 3.2% increase that occurred in 2024. Overall, any cost of living adjustment is always helpful for seniors, especially due to the many increases in costs that we've seen in things like groceries, property taxes, and even homeowners insurance. So this is, I think, a good benefit for seniors. In case you don't know, Social Security measures the change in the Consumer Price Index Urban Wage Earners, or CPIW, in the third quarter of this year as compared to the third quarter of the previous year. And then they take the average of each month in the third quarter and compare that to the average from the previous year. That's how they determine what the cost of living adjustment is going to be each year. And part of the delay was that apparently the group of government workers who do this had been furloughed, so now they've been brought back, I believe, to do this work. So since 1972, Social Security has been calculating their cost of living adjustments this way, essentially based on a measurement of inflation in the U.S. economy. So prior to 1972, any increase in benefits needed to be authorized by Congress. And we could imagine how that would be going right now if Congress needed to actually authorize this. When that change was made in 1972, inflation was high and the 3% rule was first enacted. And this required that Social Security benefits only increase if there was at least a 3% change in the CPIW. By the 1980s, inflation had lessened and the 3% rule was removed in 1986. And so currently the rule states that there must be at least a 0.1% increase in the CPIW year over year third quarter to trigger an increase in the Social Security cost of living adjustment. Now it's known we've had high inflation in recent years, especially over the past 5 years, and we've seen significant adjustments to Social Security over that 5-year time frame, a cumulative increase of over 22%, which averaged for that 5-year period 4.62%. So over the past decade, cost of living adjustments have been higher than the previous decade, and they've averaged 3.1% per year. However, there have been some years, such as 2009, 2010, and 2015, where there was a zero cost of living adjustment. The largest cost of living adjustments ever, ever since 1972, since we have the new way of COLA or cost of living adjustments being calculated, the largest ever occurred in 1980. It was 14.3%, and then the year after was the second largest ever at 11.2%. Now, the Social Security Administration made it clear in its press release that it will not be necessary for beneficiaries to contact the Social Security Administration. Beneficiaries will be notified by mail in early December what their new benefit amount will be. And if you want to get that information faster, you can go on the Social Security website, ssa.gov, and you can log into your account, and you can then sign up for email or text notifications, and you will then get an alert when your cost of living adjustment has been posted as a message to your account. Otherwise, you'll receive it in the mail. Now, anyone age 62 and older who's not yet started to receive benefits, so remember, at 62, you could potentially start to receive benefits, you will also get this cost of living adjustment, but it's not going to show up directly in your statement. Rather, you can rest assured, according to the Social Security Administration, that in the year that you actually file for your benefits will be calculated using your average index monthly earnings, which accounts for these increases in Social Security. I've talked about it before. There's a formula that's used for everyone's Social Security benefit. It takes into account your earnings, your highest 35 years of earnings in your work history, and then indexes those indexes those annual earnings amounts for your current dollar benefit or your primary insurance amount. So anytime you delay your benefit, you're getting potentially an increase plus whatever that year's cost of living adjustment will be. So let's say you could have collected your benefit now at 62, but you're delaying, you're going to get whatever the delayed credit is, plus the cost of living adjustment for this year will be calculated into your benefits. Now, pivoting to Medicare, unfortunately, we don't know the change for Medicare Part B premiums yet for anyone enrolled in Medicare. And it's estimated they will be announced in late November of this year. The current Medicare Part B premium, the base premium, is $185 per month per person. And it's been estimated from some research that I've done that it will increase to about $206.50 per month next year. Now, this would be an increase of $21.50 over the current Part B base premium. So that's a rather large increase of 11.62%. So we'll have to wait and see what the actual increase is when the numbers come out. Maybe it won't be as high as people are projecting, but we'll have to wait and see. Now, at the same time, it's expected that the IRMA, IRMMA, or Income-Related Monthly Adjustment Amount, or the Medicare Income-Related Monthly Adjustment Amount, tax benefits will increase. So if you're not aware, this is an additional amount that you may have to pay plus the Part B base premium if your income is over a certain threshold. And that could range right now. If you are impacted by IRMA for 2025, you could be paying as little as $74 more a month, or if you're in the highest bracket for a really high earners in retirement, you could be paying $443.90 per month per person. So remember, IRMA is based off your most recently filed tax return. So if we're talking about 2026, that means your 2024 tax return, because that's the most recently filed, so essentially it's a 2-year lag, is what is going to be used to calculate what your Medicare Part B premiums will be for 2026. So for this year, for single filers that had a 2023 tax return of $106,000 or more, or couples married filing jointly filers whose income was over $212,000, you would have triggered IRMA in 2025, and you will be paying an additional amount per person for your Medicare Part B premium. And also, if you're on original Medicare, if you're not on Medicare Advantage and you have a prescription drug plan, you also would be paying an additional amount for Medicare Part B. So something just to keep in mind is that even in retirement, I've talked about it, you still have to be aware of what your income is. And if you're retiring soon or you retired recently and went on Medicare, just keep in mind that you also have the ability to appeal these IRMA charges if you retired. That's one of the reasons for appeal. You'd have to fill out form SSA.44. I've talked about it in other videos and episodes. I'll put a link in those below. But just be aware that you still have to think about your income even in retirement if you're going to be taking large distributions from IRAs, realizing large capital gains. So it's something to strategize potentially about to minimize the impact of paying this additional Part B premium. So for more about this, I'll put some links in the show notes. As well, you can head over to my blog and read about my last IRMA post. Additionally, the Social Security wage base, and that is the maximum amount of wages that any American is subject to Social Security taxes on, will also rise this year up to $184,500, up from $176,100. So that's a 4.7% increase over last year's Social Security wage base. So this means that if you have any wages over this maximum wage base next year of $184,500, they will not be subject to Social Security. So that's just nothing you need to do anything about. It's just you won't pay Social Security wages on that. If you're self-employed, you'll save even more because as a self-employed individual, you pay both parts of that. And if you work for a company, then your company also doesn't pay the wages on anything above that. The retirement earnings test exempt amount is also going to rise to $24,480 in 2026, up from $23,400 in 2025. So essentially, if you decide to collect your Social Security benefit early from 62 up until the year you're going to reach full retirement, you're limited to how much money you can earn and receive your Social Security benefit amount. So that number next year is $24,480. So let's say that you earn over $24,480 next year and you're 62 and older and collect your Social Security benefit. If you don't retire next year, you work the whole year, then you're going to have to see a reduction in your Social Security benefit because for every $2 you earn over that amount, your benefit is reduced by $1. So it's possible that if you have a large amount of earnings, you won't actually receive your Social Security benefit. So it's something to be aware of. It's generally one of the reasons why people that are worried about Social Security running out of money or they just feel they want to get the money now don't collect their benefit while they're working because of that limit with how much you can earn. Now that does go up starting in the year you will reach your full retirement. So what does that mean? If your full retirement age is 67 and whatever year you're going to reach your full retirement, let's say it's in 2028, then starting in that year, January 1 of that year, you can actually earn up to a different amount. And that amount next year is $65,160. So if you earn below that amount and you collect your Social Security benefit at the beginning of that year, you will not see any reduction in your Social Security benefit. And that monthly is $5,430. And then starting with the month you reach full retirement, there is no earnings limit. You can collect your full Social Security benefit, have any job you want, making any amount of money, and there's no reduction in your Social Security benefit. So something to be aware of. So I hope this update on Social Security is helpful to you. And if you're currently receiving Social Security benefits, make sure to be on the lookout for your COLA adjustment and even consider signing up online to receive those notifications. And when I do get more information on Medicare, I'll be sure to post that as an episode. And if you have a listener question you want to have considered for a future episode, you can head over to retirewithryan.com and click on Ask a Question to have your question considered for a future episode. Have a great week, and I look forward to talking with you next Tuesday. Take care.